Hello everyone, I'm Sahil and welcome back to the channel. So JD Logistics, a spin-off from JD.com, is set to go public on 28th of May. So I believe it's a high time that Mr. Sahil here makes a video on it, hoping to get some subs from all the hype, I guess. Anyways, in this video, I'm going to cover the entire investors prospectus that JD Logistics or JDL has filed on the Hong Kong Stock Exchange. I'm going to divide it into 5 different segments. So firstly, we'll be looking at the industry overview. Then we'll look at the business of JDL itself, followed by the competitive analysis, then the financials, and lastly, some of the details of the listing. As a disclaimer, however, I want to say that all the information that we'll talking about I will be covering in this video comes from JD Logistics itself, and there could be some biases. I'm not going to put in any of my own thoughts into this video. I'm just gonna make it very pure for you to just have a view of the prospectus and nothing from my side, so you can make your own decision. And if you want to know more of what I'm talking about here in detail, you can just go and read the prospectus yourself. There will be more details over here. In this video, I'm just gonna summarize everything. Also, the market data that we'll be seeing later in this video comes from China Insights Consultancy, CIC in short. They compile the information on request of JD Logistics, so JD Logistics paid a fee to them. However, JD Logistics has been very clear that the payment of such fees has not impaired the fairness of the conclusions drawn in the CIC report. With that said, let's get it rolling. Starting off with the industry overview, JDL says that despite the massive market size, the Chinese logistics market remains inefficient and fragmented as compared to the more developed countries. They prove this by showing that China has a higher logistics spending as a percentage of GDP at 14.7% as compared to the 7.6% of US and 8.5% of Japan. Further, they divided the logistics market into 2 groups: first-party logistics and the outsource or the third-party logistics. First-party logistics refers to the logistics activity where buyer and seller manage the packaging, storage, and transportation of the goods by themselves. However, as the business grows, these buyers or sellers face more sophisticated customer needs, making it more challenging for them to handle the increased volume and the complexity of the customer demands. Hence, they turn towards the outsourced logistics where, due to its infrastructure and resource planning, it has a higher level of efficiency, and it also takes some headache off from the enterprises, and they can focus on their own core businesses. As you can see in the chart over here, in China, the outsourced logistics services market has seen a rapid growth and is expected to grow at a CAGR of 7.1% in the next 5 years, which is faster than the expected growth in the total logistics market at 5.3% in the same period. JDL further defined a sub-segment of the outsourced logistics market called the integrated supply chain logistics services. Third-party logistics companies in this sub-segment offer a full spectrum of services ranging from express delivery, full truckload or less than a truckload transportation, last mile delivery, warehousing, and other value-added services such as home installation and after-sales services, which are tailored to the customer's needs. Such companies use advanced tech and are data-enabled. They also have specific industry know-how and insights. So as you can see in this chart over here, the market size of the integrated supply chain logistics services industry in China is expected to grow with a CAGR of 9.5% in the next 5 years, which is approximately 1.8 times the growth of China's overall logistics spending over the same period. Its penetration is also expected to increase from 31% to 34.6% in 2025. So these numbers suggest that there's a huge tailwind for logistics and specifically the integrated supply chain logistics market in China. And this is not really a surprise knowing that how much e-commerce is growing and how much potential it has going forward. But what does it mean for JDL? Well, to understand that, we need to find out what is their business, what are they involved in. So let's move on to the business overview to have a look at that. JD Logistics, in its own words, is a tech-driven supply chain solution and a high-quality logistics service provider in China. They offer full spectrum of services ranging from warehousing to distribution. So they are operating in the integrated supply chain logistics business that we were talking about earlier. It is also important to understand that JD Logistics, when it was first established in 2007, was only supporting the in-house orders from JD.com, its parent company. However, it went on to become a standalone company a decade later in 2017, and now it offers its services and solutions to third-party retailers as well. The percentage revenue generated from JD Group, which includes Dada as well, has dropped from 71% to 53.8% in the past 3 years. And this is a great sign because it shows that JD Logistics was able to expand its customer base away from the parent company, and they are doing it quite fast, and it will keep on increasing as time goes by. In 2020, JD Logistics served over 190,000 corporate customers, operating over 900 warehouses with a team of 190,000 delivery personnel, and also connected with an extensive crowdsourced on-demand delivery network. The top 3 industries that JD Logistics is operating in are the fast-moving consumer goods, which is like skincare or food and stuff like that. Secondly, the home appliance and home furniture. Thirdly, the 3 C's, the computer, communication, and consumer electronics. These 3 industries in total make up about 70% of their revenue from external customers. And FMCG, the top vertical, itself contributes about 30 to 40%. Now, if you see the trends of the industries which require the most logistics services, we see that these 3 industries are expected to have the most growth in the next 5 years, and JD Logistics is well established in these 3 industries to take advantage of that. In terms of strategy, they are focused on 2 things. Firstly, the customer experience, which they believe is their bedrock, and secondly, their tech capabilities, which is really the highlight because they have achieved quite a bit in that space. They have a fully unmanned warehouse in Shanghai, which can process about 1.3 million orders per day, and it is already operational. So this is not something that they are working on, like all the drones and stuff that everybody is just like talking about, but this unmanned warehouse is already implemented. And yeah, so they're also working on the unmanned vehicles such as small cars and quadrocopters for last mile delivery. If they're able to achieve this in a practical sense, it will really ultimately lead to a high efficiency and also lower down their fixed costs, so they don't have to their personnel need for delivery orders will decrease, and they will be relying on mostly on their drones and unmanned vehicles if they are able to implement that. And I think it's a long way to go for this to be implemented. Like, you have to build an entire infrastructure around it, not just within JD's side but also at the customer's end. So yeah, now moving on to the competitive analysis. The integrated supply chain logistics services market, according to JD Logistics in China, is highly fragmented, as I mentioned in the industry overview. This is due to the vast size of the market and the specific requirement across each industry vertical. The top 10 players only account for 9% of the market share in terms of revenue in 2020. Among the top 10 players, JD Logistics is the largest integrated supply chain logistics service provider with over 2.7% market share. This means there is a significant potential for market consolidation, as the bigger player who are operating more efficiently, and if they are able to provide better service as well at a large scale, will continue to consolidate and also capture more market growth potential. Smaller players, however, are usually regional and industry focused, so it makes more difficult for them to scale and also consolidate across regions and industries. As such, they are unlikely to be a significant threat to the leading players. So JD Logistics gave out this few comparables over here. They didn't name the companies that they were comparing with, but JD Logistics obviously is the market leader with 2.7% market share, and then the second one following them is 1.1%. I'm not going to go in there and figure out which company it is with the information provided, but if you are interested, you can go ahead and do that. Now, moving on, JD Logistics, according to them, have the following competitive advantages that contribute to their success and differentiate them from their competitors. So moving on, JD Logistics, according to them, have the following competitive strengths that contribute to their success and also differentiate from their competitors. So firstly, they are the largest integrated supply chain services provider. Secondly, they have strong operational efficiency and that drives high quality service. Secondly, superior brand image and customer experience because of the JD name. Fourthly, advanced proprietary technology empowering the entire supply chain. This is, I think, debatable because other companies are rushing for the same things, but we can see JD achieving something over the course, like something substantial with a fully unmanned warehouse, and they will be building up more of those. So yeah, also they have an experienced and a visionary management team. This is again debatable, but that's what JD says. The next segment we have are the financials. So as you can see from the charts over here, they have achieved rapid growth in terms of revenue in the past 3 years. It grew by 31.6% from 2018 to 2019 and a further 47.2% last year. During the past 3 years, they have also continued to improve their gross profit margins, which increased from 2.9% in 2018 to 6.9% in 2019 and a further 8.6% in 2020. The increase in the gross profit margins in 2019 compared to 2018 was because of economies of scale, which is expected. But the increase in gross profit margins during 2020 was due to the COVID-19 related government policy support, such as relief for social security and waiver of toll charges. And this is something that is not going to continue and will actually see a drop in the gross profit margins this year. And GDL also said that they will be prioritizing growth of business and expansion of the market share over profitability in the near to medium term. Hence, no surprise that they are running a net loss, as you can see from the chart over here, and their net profit margins are all over the place. Also, the company expects net loss for 2021 will increase significantly compared to the year end 2020. Again, this is due to the support that they were getting in 2020, which they won't be getting this year, and also other reasons related to their preferred shares that would be converted and all sort of things. So that is a non-cash loss, but still net loss in the income. Also, you should take note that JD Logistics is quite persistent in telling prospective investors that they are expected to record a significant adjusted loss in year 2021. In their own words, given our focus on business growth and market share expansion over profitability, we expect that there will be fluctuation in our profitability over a short period, which can be further compounded by seasonality factor. During the first quarter this year, JD Logistics revenue recorded a growth of 64.1% from the same period last year. However, gross profits were down 72.7%, which is a huge drop. So you should be quite wary about this. Now, let's look at some of the listing details that I could pull off. So IPO is commencing on 17th of May, but it's not for us, probably for the bigger sharks out there. JD Logistics is issuing 609 million new shares in this global offerings. That will make about 10% of their total outstanding shares after the listing. Their share is started to trade on the open market on 28th of May under the ticker of 2618 and is expected to be priced in between 39.36 HKD to 43.36 HKD. This could value the company to about 30.9 billion to 34 billion USD, and this could be the second largest IPO on Hong Kong Stock Exchange this year. The actual price will be fixed on 21st of May, but if we just take the numbers that we have, the 39.36 HKD to 43.36, it will give us a trailing 12-month, including Q1 2020, price to sales ratio ranging in between 2.91 to 3.22. Now, this is quite steep compared to the 1.94 price to sales ratio of SF Express, which is a competitor to JDL in China. Note that SF Express is also profitable. The IPO has already attracted 7 cornerstone investors so far, which includes SoftBank buying about $600 million worth of shares, Temasek Holdings buying about $220 million, Blackstone 150 million, Tiger Global 200 million, and there's another three, which brings the grand total to about $1.3 million worth of share. This is already about 45% of the IPO. So JDL really has some hype, and let's see what happens when the trading begins. So if you're planning to buy, just let me know through the comments below. I would really love to know. But if you're asking me if I'm buying, the answer is a straight up no. The reason being, firstly, I don't really need to. Like, there are better opportunities where I can deploy my cash. Like, I could rather be buying JD.com instead of buying JDL right now. JD.com is at such a great value at the moment. Secondly, it's not profitable, and I've learned my lesson from my previous investing. I can't really value a business that is not profitable, and if I don't know what is the fair value of the company, I can't really deploy my money. Like, it's gonna haunt me because I would never know if I made a right decision or not, and I just don't want to take that worry, right? The whole point of me investing is not having worries. So that's another reason. And lastly, I just don't buy into companies that just IPO. So just give you a gist of it. Companies IPO, like, when they can get the most value of the company, right? The founders are smart. They want to sell their assets when they can get the most value and when the market is most hyped up, which is the current times, right? So when the market is really going high, right, and there's a lot of optimism, you'll see a lot of IPOs start to happen, and this is the case here. Also, like, you can see from the filings, right, they're expecting so much of losses the following years and so much of investments coming in. So I don't see a point of investing right now. Yeah, it is a very competitive business. So I would rather be investing into JD.com, which has more opportunities to expand, to go worldwide, and has lesser investments to make, whereas JD Logistics have a lot of investments to make, a lot of money to burn ahead of it. So that's all for today. I hope you got something out of this video. Until the next one, ciao.